Well, good morning, Bob.
Good morning, Bill.
We are talking this morning on FNC's Morning View about bank regulation. And there was a fascinating article in The Economist. I'm glad to know that you read other things. I thought for a while you only read the New York Times. It was the New York Times and occasionally the Wall Street Journal, but now we've expanded our horizons. We read an international publication, The Economist, and we're amazed.
Well, you know, there was also a really good article on quantum information theory this weekend.
But not in The Economist.
No, it wasn't in there. But, you know, it was, with the Nobel Prize in quantum information, everybody thought it was going to be on the Higgs boson. But quantum information theory is pretty cool.
You're talking about the Nobel Prize in economics?
In physics.
Oh, in physics. I'm sorry. Excuse me. Actually, it's fascinating. Really, the Nobel Prize in economics is not really a Nobel Prize.
No,
it's
that's correct.
Sort of a Nobel Prize.
Right, sort of. Yeah, but it's close.
It's close. Would you count? I'd count it. If you got it, we would count it.
It's a lot closer than the Nobel Prize that's awarded in finance.
Yes, it is. Although many finance people win the Nobel Prize in economics.
They sneak in every once in a while.
No. Anyway, back to our discussion. We're talking about. It's fascinating. It was just awarded in economics. It was awarded on a study on markets, and we're talking really about markets.
Well, I mean, you know, it's one of the essentially a drag. In physics, we call it friction. You know. But in economics, they have different terms for it. But it's essentially all of this regulation that, also, on one hand, provides a structure for people to do business. Okay?
And a framework and hopefully protection for consumers.
Right. And on the other hand, it's a huge drag on business. And so, you know, it's a trade-off. It's a cost, absolutely. It's a tax in a way. And this article talked about all the different regulatory groups that the banks are having to deal with right now.
Let's go down the list.
SEC.
Okay, so the Securities Exchange Commission, but they can't do anything criminally. They can only do things civilly.
Well, civil is a big deal. You know,
a lot of money.
Yeah.
And
OCC.
And so, rather than litigate a lot of these cases, either civilly or criminally, banks will just reach a settlement.
Right. In fact, it's costing them so much that they just jump to settlements anymore because it's rather settled rather than even if there was no wrongdoing whatsoever.
And really, in essence, so let's take the different stakeholders in this litigation, whether it's civil or criminal, and let's talk about the different players. So let's first talk about the myriad of regulatory. Let's start with the federal level, then let's go to the state. And at the federal level, a bank has got to deal with a lot of regulators. You mentioned the Securities Exchange Commission. If they're public,
right?
They may not be public, so they're out.
But they still may deal with various types of securities, and so they could be influenced there.
So then you've got the banking regulator, whether it's the Fed, the FDIC, the OCC.
Right. You've got the CFTC,
the
Commodity Futures Trading Commission,
and they're dealing with fairness in advertising and deceptive advertising and disclosures and that sort of thing.
Right, and they're the ones
with the Federal Trade Commission.
Yeah, and they are the ones that got involved in the LIBOR issue. You know.
And LIBOR is still not resolved.
No.
For those listeners out there that may not deal in rates, LIBOR is London Interbank Offered Rate, and it's basically the rate that the big London banks charge others. It's quoted by the British Banking Association, or compiled by the British Banking Association on a survey, and by what banks will loan to each other in various maturities, very short term to out to up to typically a year, but 6 months.
Right.
The most common is 30-day and 90-day.
Right.
And so we've had all sorts of litigation arising out of that.
Well, there's some accusation that they were setting those rates to be favorable to themselves.
Well, it's not clear if it was who was harmed and who was helped, right?
Well, certainly some were harmed and some were helped.
Or you say it's a zero-sum game.
It appears to be that way.
So let's talk about more, but besides CFTC and the Federal Trade Commission, let's talk about some other regulatories. We have a new one.
The Office of Foreign Assets Control.
OFAC. And that's a lot around the Bank Secrecy Act.
Right, yeah, and HSBC, for example, had some issues with some of the Iranian money, and There's the Federal Crimes Enforcement Network.
FinCEN as it's called,
Right.
the trade. But just think about all that banks have to do to keep up with that.
Oh, I know. And in particular, the next one I was going to list, the Fed with the Dodd-Frank. There's those are changing almost every week because the regulators are implementing new regulations to support Dodd-Frank.
Well, the Consumer Financial Protection Bureau, CFPB, they don't have their regulations written for a lot of their areas.
Dodd-Frank doesn't either. And there's a bunch of them that aren't done.
And so, what's a bank to do? All right, it appears as though there's an enormous burden, and you hear all this, and so you would think it would affect profit.
Well, it does. And there was a nice chart in this article that showed how much of the profit some of the big banks were spending just on the litigation.
Well, now, it also serves as a barrier to new entrants.
Well, that's true.
And so,
Right. So you don't want to become a big bank?
It protects my turf, all right? So there's a flip side of that regulation.
Yeah.
The flip side is, yes, it imposes additional costs to current market players, but it also, in effect, erects a moat, and it erects barriers to new entrants, which, if you're an existing player, that's a good thing.
Yeah. I mean, it's a big amount. It ranged pretty dramatically. I think with Wells, for some reason, they only had a very small percentage, about 1% of their profit. But Chase and Bank of America were up around 13–14%.
Well, that's just the regulation. That's not the private litigation. Let's talk about the private litigation.
Well, that litigation is, and a lot of it's coming too from the states. The states are very active.
So we've talked about the federal.
Right.
The states, AG, almost governor.
Right.
Do you like that in the article?
I do, yeah.
try to make a name for themselves. Although, frankly, some of these really cases appear to be on the surface frivolous.
Well, one of the things that the article pointed out is that a lot of these state attorney generals are using these to make a name for themselves and to generate revenue for state budgets. And the banks, rather than fight them, are quite willing to just go ahead and settle.
And just get them to go away.
Yeah, I had a journalist call me last week and was talking about, well, why are the banks so reluctant to implement new mortgages, do more loans? Why are there any hesitancy? And I talked to her about the fact that there's a lot of uncertainty about these regulations. They've had to take back a lot of loans, and many of them because of regulations, and that once the regulations are in place and stable, they can put in systems and controls to deal with them. But when they're constantly changing, it's a real detriment to doing business.
It introduces uncertainty. And
a lot of uncertainty.
So if you were going to keep making loans in a state, what would you think if a bank said, if you want us to keep making loans in this state, you need to give us a safe harbor against claims of prosecution?
Well, that wouldn't be real popular with the state government.
No, it wouldn't, especially not if it was a source of fee revenue.
No, that probably, I don't know, they could be like some states and say, well, go away, we've got local banks that will take care of that. So
as long as they can still sell those loans, it'll all be fine.
Exactly.
So let's talk about what is a bank really to do? I mean, they face these additional regulations. At the same time, it's a burden to new entrants. So that's
right.
a good thing.
Yeah, it is. But I mean, I think that the bottom line is that it's just a cost of doing business, and it's going to vary. Sometimes after some problems like we've had recently, it's going to be a bigger cost, and other times when it's more stable, it'll be a smaller cost.
Right.
But I think that banks are just figuring that, okay, we just put that down on the budget and say that that's how much we're going to spend for this litigation, and it's just a cost of doing business, and we go on.
And all of that will work its way through the pipeline. How long before all this litigation works its way through the pipeline?
Oh gosh, it's going to be a couple more years at least before a lot of that litigation from this recent downturn is done. It may be 5 or 10 years.
And so when that's all done, we should see bank profits returning on.
Well, profits are going up pretty good right now.
Exactly. So if that's the case, how come profits are going up? I mean, let's just get down to the numbers. we hear about all this increased cost in regulation around mortgages, and yet we look at many of our clients are making record profits on a per mortgage basis.
Right, and mortgages in particular are doing very well right now.
Yes, they are, and we have all this regulation, and yet they're doing very well. So something, according to your economic theory, does not jive.
But we talked about that a little while ago, that there's a big difference right now between the 10-year rate
Right.
and the rate that the mortgages are doing. So there's a good little cushion in there.
It's
that's
spread,
working out really
it's
nice.
pricing right into the basically the profit of the institutions that are heavy in mortgages.
Exactly. Yeah.
So, is there anything else we need to talk about related to this, or is this something our listeners need to chew on for a few days and revisit this?
Well, we could talk about qubits and quantum information.
I think they need to chew on this, and we need to leave qubits alone for today.
All right.
This is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. You all have a fantastic day.